All right, welcome to the second hearing of the inquiry into the status of water trading in New South Wales. The inquiry is examining the origins, purpose, regulation and abuse of water trading market. It will also look into evidence of market practices and their effects, including cornering, playing, fixing the market. The committee will also examine the effectiveness of water registration and disclosure and the effects of water trading on the economy and the environment, communities and the environment. I acknowledge the Gadigal people of the Eora Nation, the traditional custodians of the lands in which we are meeting today. I pay my respects to elders past, present and emerging, and celebrate the diversity of Aboriginal peoples and their ongoing cultures and connections to the lands and waters of New South Wales. I acknowledge and pay my respects to any Aboriginal and Torres Strait Islander people joining us today. Today we'll be hearing from academic experts who will be appearing via video conference. I thank everyone for making the time to give evidence to this important inquiry. Before we commence, I would like to make some brief comments about the procedures for today's hearing. Today's hearing is being broadcast live via the Parliament's website. A transcript of today's hearings will be placed on the committee's website when it becomes available. In accordance with broadcasting guidelines, media representatives are reminded that they must take responsibility for what they publish about the committee's proceedings. While parliamentary privilege applies to witnesses giving evidence today, it does not apply to what witnesses say outside of their evidence at the hearing. I therefore urge witnesses to be careful about comments you may make to the media or to others after you complete your evidence. Committee hearings are not intended to provide a forum for people to make adverse reflections about others under the protection of parliamentary privilege. In that regard, it is important that witnesses focus on the issues raised by the inquiry terms of reference and avoid naming individuals unnecessarily. All witnesses have a right to procedural fairness according to the Procedural Fairness Resolution adopted by the House in 2018. If witnesses are unable to answer a question today and want more time to respond, they can take a question on notice. Written answers to questions on notice are to be provided within 21 days. Excuse me. If witnesses wish to hand up documents, they should do so through the committee staff. In terms of audibility of the hearing today, I remind both committee members and witnesses to speak into the microphone. As we have witnesses appearing via video conference, it may be helpful to identify who questions are directed to and who is speaking. For those with hearing difficulties who are present in the room today, please note that the room is fitted with induction loops compatible with hearing aid systems that use telecoil receivers. And finally, could everyone please turn their mobile phones to silent for the duration of the hearing. I now welcome our first witnesses, Mr. Scott Hamilton and Professor Stuart Kells. Could each witness please state their name and position title and either swear an oath or an affirmation? Maybe starting with you, Stuart.
Thanks, Chair. Mr. Borsak. I'm Adjunct Professor Stuart Kells. I have various different affiliations. Can you hear me okay?
You know, you'll find it's just the volume's a little bit low here, so no matter how loud you talk, I've got to get it turned up at this end.
Brilliant. Like Scott, I'm appearing in my private capacity and including as authors of the book Sold Down the River. And I solemnly, sincerely and truly declare and affirm that the evidence that is now about to be given by me shall be the truth, the whole truth, and nothing but the truth.
Thank you. Mr. Hamilton.
Thank you, Chair. My name is Scott Hamilton. I'm a co-author of the book Sold Down the River with Stuart Kells, and I appear today in my private capacity. I'd like to I solemnly, sincerely and truly declare and affirm that the evidence now about to be given by me shall be the truth, the whole truth, and nothing but the truth. Thank you.
Thank you. Would either of you or both, or one for both, like to make a short opening statement?
Yes, Chair, thank you. I think we will. Scott, I think I'm going to go first, if that's okay, and then hand over to you. Just a very brief opening statement. Would you like me to commence?
Yes, please.
Brilliant. So, as I said, thank you, Chair. The Honourable Mr. Borsak. We're grateful for the chance to speak to you today. We're joining you from Wurundjeri land in Melbourne. We commend the members for this important work. The inquiry is an opportunity to clarify what has gone wrong with the water market and to map out some high priority reforms. This, as I know, appreciate, is a difficult issue affecting real people in the Murray-Darling Basin, as well as affecting the wider economy and the environment. We also commend the people and organisations who've made submissions to this important inquiry. There is a lot of frustration in the basin, again, as you appreciate, because of the big impacts and because people feel in many cases that they are not being heard. So the members' work on this inquiry is very important in that respect as well. Scott and I consider that the normal policy error correction methods, the normal processes of correcting a flawed and failed policy, are not working in this particular case. And there's a few reasons for that. One is the daunting complexity that you all understand. One is that there are very powerful vested interests at work. And another is that the regulators, to some extent, are conflicted and ill-equipped to solve these issues. As the young lawyers from New South Wales put in their submission, the water market is susceptible to mediated corruption, rent-seeking behaviour, and regulatory capture. So, from our point of view, and we're keen to discuss this with the committee, to unpick the problem, we need to go back to the very first question for public policy. What is the water market for? Fundamentally, it is a cap and trade mechanism, and within the cap, the market is intended to allocate water efficiently, efficiently to maximise the economic return from irrigation. That was the intention, but it is a long way from what we have today. We've got instead a market that maximises the financial returns from complex arbitrage trading, and some of the submissions bear upon that. Governments originally allowed external traders in the market in order to make the market work better, and in particular to increase liquidity. But in reality, that has not worked. The market is not very liquid, and the external traders are reaping very high profits at the community's expense for no public value. The problem is complex, but the solution in the near term is straightforward. Greater market integrity is urgently required, and this includes for brokers as well as for general market conduct. We need to centralise information so that there's a single source of truth about bids and asks and transactions, and we need to publish the depth of the market at any particular moment in real time. We need to scrutinise the links between traders and agribusinesses and managed investment schemes, and we're keen to go into that to describe what we mean about that. And ultimately, we may need to phase out the pure traders by having them sell down their holdings and retreat from this market. And I'll pause there and hand over to Scott.
Thank you, Stuart, and I'll just make a couple of brief additional comments. Importantly, I think that I'd just like to refer and acknowledge the breadth of people and people involved in the water market that we spoke to as part of our research, that included farmers, irrigators, brokers, traders, bankers, academics, public servants, environmentalists, and First Nations people. I think one of our major findings, which is in our submission, is that it is not a level playing field when it comes to the water market. And to give just one example, there was an example that we spoke to about a farmer standing on the top of a tractor, trying to get a signal to make a water trade. Now that person taking place in that market is competing with people that have much better IT systems, have much better knowledge about the market and what is going on. They also have the benefit of heft often, and the ability to track and monitor up to 30 websites at a time. And farmers don't have the time or the capacity to be able to do that. The other important point is the Australian Competition and Consumer Commission now about 20 months ago finished a comprehensive report and an inquiry which took about 19 months and included about 29 recommendations, many and most of which both Stuart and I agree with. I think the concerning bit is the lack of change and putting in place the implementation of those recommendations. And we simply don't have time to continue to wait years to make the changes to this market that are needed. In terms of our summary and our submission that I would draw the committee members to, our key findings are that Australia's water market designers did not pay enough attention to market governance or to trader conduct or integrity. An example, there are few controls on water exchanges and brokers, as Stuart just mentioned. The water market is overly fragmented. There are multiple trading platforms for every type of water right, and there's no single market price at any moment, and therefore it's difficult to understand the depth and breadth of the market at any particular time. The cap and trade model doesn't cover the whole system. And the other issue we believe is that water policy is too important to be left to water regulators. We need a policy that is driven by people that are not the regulators of the water market, and also bodies such as the Australian Securities and Investments Commission having those type powers to be able to follow the market and investigate what is a commodities market in this day and age. And finally, as I mentioned before, there is a huge power imbalance between the farmers and the professional traders. And when it comes to First Nations people, the power difference is even greater. And I think that if we really want to talk about closing the gap in this country, we have to think about how we have much better and fairer sharing of water and benefits with all our people, and most importantly with our First Nations people. Thank you.
Thanks very much. Questions?
Yeah,
Yeah, you want to start, Nick?
Mr. Hamilton and Professor Kells, thanks for your submission and the book. I guess from a New South Wales jurisdictional perspective, first question from me would really be, and it's a big question, but what exactly do you think the New South Wales government can do to address the issues that you raise? Like if this committee was to make recommendations, what do you think they would be?
Stuart, do you want to go first or?
Yeah, sure. Thank you. I can't quite see the honourable member's name
Mr.
on the
Veach.
screen.
Mick Beach.
Thank you, Mr. Veach. Appreciate your question. So I think the short-term solutions I would distinguish from the long-term solutions. The long-term solutions, we need to think again about whether we even want a market approach to solve this problem. But in the near term, we have this market. It isn't working. I think the solutions to that are relatively straightforward. We do need a more centralised market, and that's what the ACCC have found as well. At the moment, it's too fragmented, and that is aiding these aggressive arbitrage tactics. So we need a single platform or umbrella that brings the different exchanges together, or a single exchange, a single source of information about pricing. We need to publish information about market depth at any particular moment, because at the moment what's published is pretty minimal. We need better information about who's trading and who owns water. And even more urgent, we need really strong controls on integrity. Through a series of specific decisions in the past, this market is not subject to the same kinds of controls that cover real estate or the stock market or bond trading or all sorts of other markets for commodities and for securities. And yet, as you know, it has evolved into a very significant and sophisticated financial market. So we need to apply those same controls around things like independence of brokers. At the moment, there are all sorts of undisclosed relationships between brokers and multiple parties. Sometimes brokers trade their own book, and they trade their assets that they own themselves without transparency in ways that would be prohibited in other markets. There's all sorts of other conduct around signalling, active trading, and signalling sometimes misleading prices, all sorts of other kinds of market conduct that goes on that would be prohibited in other markets. So urgently, that issue of integrity needs to be addressed, and that issue of market information and centralisation. So there are two categories of things. The third thing, something that Scott and I have really highlighted in our research, something that the ACCC touched on but didn't really go into, is relationships between market participants, including the hedge funds and the active arbitrage traders on the one hand, and managed investment schemes and agribusinesses on the other. Part of our finding, what we heard from key people in the market, is that there are these important relationships between some of the more sophisticated traders and managed schemes and agribusinesses, some of them quite low return pension funded developments further down the river, but that provide a lot of important information and clout and scarcity that the traders can then use in their tactics. And I'll draw your attention as a committee to the submission from Argyle Group. I certainly don't want to single out Argyle as for criticism. I would expect they're probably one of the more ethical trading outfits around, based on their submission and some other things. But what they say in their submission is very telling. They talk about the kinds of arbitrage trades that they're engaged in, which obviously use very sophisticated strategies to make use of wrinkles in the market, etc. Those sort of strategies would be less viable if we had better information and higher integrity and move towards a more level playing field between farmers and traders. But also, Argyle go to significant lengths in their submission to say that where they are trading on both sides of a transaction, so for example, where they're actively trading on one account, but also transacting with managed schemes and other agribusiness investments that they have a stake in, pardon me, that they are careful about tying their own hands around the use of information and the kinds of benefits that could flow to them from using that information and being on both sides of a transaction. Now, I would make 2 points about that. One is, and I don't want to sort of pat ourselves on the back, but you would not have heard that from a company like Argyle without the work that Scott and I have done to highlight that problem. That's the first thing. Argyle would not have made that, would not have emphasised those principles without the work that Scott and I have done. But also, I am reasonably confident that other participants and other active traders and hedge funds do not apply those same principles and therefore use access to agribusiness information, use these relationships to their benefit, and therefore to the cost of the community and to the cost of farmers. So I think a real priority is to scrutinise those kinds of connections and to put some controls around them. Fundamentally, we have a hyper 1990s under-regulated Wild West market, which if we were building it today would look very different in terms of who's allowed to participate and how they're allowed to participate, and the kind of integrity and controls, the kinds of principles around third-party relationships, etc. And I'll just finish with one quick parable. Scott and I are lucky we get to move in all sorts of different circles in politics and in finance and in the regions, and we've spoken to a lot of people, as Scott said. And I've personally worked in relevant spheres, including with people who advise family offices and so-called high wealth individuals. These are mentioned in some of the submissions, and I think it's important to unpick this. The kinds of returns that people are getting in the water market as active traders are in the sort of vicinity of 30% per annum, 40% per annum, sometimes 100% per annum, right? These are world-class hedge fund returns that these aggressive traders and sophisticated traders are earning at the expense of regional communities for no public benefit, right? if I were a family office or a high wealth individual, and as I said, we rub shoulders with these people, and I had a hedge fund working for me and it was earning 30% per annum, I'd be very happy and I would continue that conversation. If a water-based trader came to me and said, here's an amazing investment I've got, we're doing some greenfields agriculture out past the Barmer Choke and it's going to earn 3% a year or 4% a year, which is what those investments are yielding, I would say, don't ever darken my door again, go away, right? And this is really important that people have missed this point. There's all sorts of different kinds of investments, all sorts of different kinds of conduct. The financial world is very stratified. A hedge fund would never be interested in a 5% return unless it supports and buttresses and facilitates a 30% return or a 40% return. So the reason why these traders care about those low return, unsophisticated, unsexy agricultural investments is not because they care about the 5% return, it's because they care about the 50% return and the 100% return. So that nexus, which Scott and I have highlighted in our work, hasn't had enough attention. The ACCC confirmed that that was an issue. They confirmed that the more sophisticated traders used this information and used these relationships to support their trading strategies. And as I said, Argyle touch on this in a way of saying they don't do that, which is laudable. But I think if we were collectively as a society to scrutinise those sorts of connections, we'd be surprised about what you would find in the same way that Scott and I were surprised. And we were also surprised about some of the market conduct that happens that is, as I said, prohibited in other markets. So sorry for the long answer, but it's a really important question.
Mr. Hamilton, you going to add to that, or you?
Maybe just a couple of brief comments, if I may. That I think that one of the things we have to understand is that this water market, which is now 20 odd years old, started off as quite a small niche sort of thing that was occurring. And it's now a market which is literally hundreds of millions of dollars and billions of dollars involved. So we need to regulate it like we would other financial commodity markets. And we as the governments, including the New South Wales government, made choices not to regulate it that way and to not have the sorts of transparency and regulation of the participants in the market which is needed. So from a New South Wales government point of view, there are some fundamental things that I think can be done relatively quickly and need to be done. And they include things like improving the transparency of the market. And it's only just recently that the Victorian government passed some laws to actually identify who the major water holders were, which came out of, people might recall, the radio chats about Eddie Maguire owning water and no one could tell whether he could or not. And anyone that's gone and looked at the water markets or else looked at the registries, it is very difficult to find out what is going on and who owns what. And then the second part of that, of course, is to have transparency around the trades and the real time information about those trades. And the other sort of area which I think is definitely within the New South Wales bailiwick is the regulation of the brokers. These brokers have an enormous access to knowledge and information and are critical market participants and need to be regulated accordingly, like we would a financial services broker.
Okay, thank you. Wes?
Thank you. Before I start, I just want to compliment Mr. Hamilton on the subtle placement of the book in the background. I always appreciate a little bit of product placement whenever you get the opportunity. So well done. I think that should be acknowledged. I noted during the opening statements that there was a lot of discussion around the historic events around water trading. and that there was perhaps a lack of forethought around the governance issues when the system was established to allow this trading to occur. Look, my understanding is that there was obviously a number of landholders who had water licences, and there was the ability to either have the water that was associated with the landholding associated with that, or whether it could be separated so that the landholder at the time could then perhaps use that water as a separate commodity to the actual block of land that they had the license for. And that's obviously then grown and become the model that we have now, where there's perhaps a lack of transparency around who owns the water, where the profits are going, who people are trading water to. Can you provide to us some view as to the historic events and what you might have changed back then, and what it would take to do now to have a more equitable water market where those people that are producing food and fibre in our food bowls have access to water that is competitively priced at times that they need it, i.e., in year 3 of a long-running drought?
Brilliant. Do you want me to go first?
Sure.
Thank you. Mr. Fang, is that right?
Yes, correct.
Sorry,
yes, I should have introduced myself. Obviously, the fidelity on the screen might not be as good as you might need to understand, yeah.
Brilliant. Thank you for your question. So there's a whole series of different decisions over time that were made, which at each particular point were quite defensible. The idea that you could trade water between farms and locations kind of made sense, and it was in the spirit of the times. And there was already a little bit of informal trading that had gone on even before it was formalised. Very early on, there were all sorts of limits around the geographical extent to which trading could happen. Like, it was generally inside particular regions and valleys, and obviously not so much between states, and particularly with South Australia. There were limits on the external participation. So there were, I think, quite tight limits on the extent to which banks and hedge funds could be involved. And over time, very much in the spirit of the era, those kinds of controls were removed under the guise of these being sort of anti-competitive, right? They were sort of stifling the market. And so organisations like the ACCC and the Productivity Commission and constructs like the National Competition Policy led to all of those kinds of limits gradually being removed. And at the time, people like members of the National Party and farmer bodies and others really raised significant concerns about the removal of these kinds of controls, right? There wasn't just that it was done silently. They were quite controversial about whether to allow trading between valleys and between states, including a High Court case about that, and whether to allow external participants. But over time, as I said, all of those controls have been scaled right back. Obviously, one obvious question is whether to think again about those things like participation and geographical scope. It would be pretty hard to unpin the ability to trade water across different distances, including up and down the Murray and between valleys. But definitely worth thinking about that again, and particularly, as I said, about external participation. Can I just make one quick comment before I hand over to Scott about the ACCC? We concur, as Scott said, with a lot of what the ACCC found in their inquiry, and through a whole different series of means, they've found similar things to us, although they present them in different ways. We feel that they have pulled their punches, really, in their report, and there's a few reasons for that. One is, in a sense, they're reviewing their own work, because they've been involved in this for a long time. So they're somewhat conflicted about how critical they can be about the market, whereas Scott and I are quite disinterested. We don't own water, we don't work in water. We can be quite open about how we feel that it's failed. The second point is that they are applying a construct around market dominance. It really doesn't suit this market. They're applying a construct from a sort of industrial organisation paradigm that's more relevant to things like manufacturing and retailing. It's not relevant to what's become really a financialised market. So they talk about things like ownership percentages of water, and it's like, oh, you can't dominate this market because you don't own more than sort of 50% of the water rights, which is just the wrong paradigm. And thirdly, and related to that, the ACCC is not a financial markets regulator. This has become a financial market. The ACCC is not a financial market regulator. They're not equipped to do this. ASIC is, but ASIC's not interested really in regulating this, I don't think. So collectively, we need to think again about how the market's designed and how it operates. But we also need to think again about who and what and how it's being regulated. Is that helpful?
It's very helpful. Mr. Hamilton, did you perhaps want to provide a little bit more insight on that before I ask a follow-up question, if that's all right, Chair?
Yeah, no,
Sure. Yeah, sure. I think that we certainly, as Stuart mentioned, you wouldn't build it now the way it has been built. I think that a couple of the key points that I would make, which are also made by the ACCC, is it's very hard to regulate what you can't see. So you need to be able to see what's going on. And the other thing is about who can play in the market is another important question. And most people are quite surprised and even gobsmacked when they find that not only someone down their street in Sydney or Melbourne can play in the market, but someone in Singapore or in Beijing or in Wall Street can play in this market. Now, our actual thinking has evolved over our journey, is one of the things I'd say about that. And one of our initial pieces of work was putting forward that you had to have some connection to the water in use to be able to play in the market, which sort of makes sense from our point of view, that if you've got skin in the game and you need to therefore have that's when you can be a market player in this area. However, part of the problem, as Stuart touched upon before, is that many of those hedge funds and banks have got wary of this, and in fact have got wary of the benefits of actually having some very large agribusiness and water heft. So it needs to be more than that. And a couple of things I think that we talk about specifically, as Stuart touched upon, is slowing down the market to make it so it's not the fastest finger wins or the fastest bot wins, I think is really important. And the other question is that obviously water is more valuable depending on where it is in the market, which valley and what it's being used for and those things. So so we're not going to end up with sort of a single price across the whole system, but we definitely could have a single register, a single ability to track and see what's going on in these markets, in these particular trades. And one of the things that we would support is having that overarching monitoring of the system and what is going on in terms of the water market, so we can make sure that we understand what is going on.
So thank you for that. I guess it leads me to the next question to come out of your answer, which is that in circumstances where, in your opening statement, you said that the solutions are, in the short term anyway, could be implemented reasonably easily, the question then becomes, what do we do in the longer term with the water market? And I guess it's a philosophical question that we can ask ourselves. So if we were to perhaps turn our mind to what reforms would be ideal into the future, where perhaps water was owned and traded by those that participated in food and fibre production along or within our food bowl areas, and not with overseas funds, banks, etc., people looking to make profit off it. How do we go about trending towards that? And in that circumstance where we have profit-driven owners, how do we look to unstitch it where I would expect they would want a compensatory or a lever around a future loss of earnings by having an asset removed from their holding? Because in effect, we want to make sure that we don't create a situation where there's a risk that the state is drawing back assets unnecessarily and creating uncertainty in investment decisions in Australia itself. So it's quite a tricky, I imagine it's quite a tricky view forward. But if that was the goal, do you have an idea as to how we would go about doing it?
Yeah, I'll have a go. Thank you. Definitely, there's different sorts of solutions over different timelines and different levels of ambition. You're absolutely right about raising the issue of compensation. If you were to move later on into a non-market sort of approach or a quasi-market approach, you have things like farmers who've sold out, or farmers who put effectively their superannuation into long-term water rights. And you would have to consider things like compensation for people like that. In the shorter term, the idea of compensating hedge funds and arbitrageurs, I wouldn't raise that at all. I wouldn't be interested in that at all. Partly because all they're doing is reaping rents out of this market, out of communities, out of farms. They can always just sell down their holdings to agricultural users of water, which is what the market was supposed to be in the first place. So you could phase out the hedge funds and the arbitrageurs without questions of compensation. And that would not lead to some kind of price crash. These people are not the basis for the price level at the moment. In some ways, the problem is that they underpay for water and they overcharge for water. That's why they earn these sorts of returns. That's why they earn 100% returns each year, or 50% returns. It's because they're underpaying for water and overcharging for it. So it would actually benefit agriculture and farmers and communities. And one of the terms of reference, I think, of your inquiry refers to disinvestment and decline in regional communities. Well, the answer is because there's a massive drain of profits every year because of the water market, which has no public value and is costing hundreds of millions of dollars every year, right? So there's no compensation for hedge funds. You would definitely have to think about compensation for retired farmers and others. And that's very much a longer term type proposition where you would have to think about whether there's different ways of allocating water. One of the very first sort of thoughts, we spoke to people who were involved in the very early policy development of this market. One of the things that was a powerful idea among the market designers and the people who were directing them, so the heads of departments and ministers and things, was that the water would flow, the water rights would flow to where they had the greatest economic benefit, which makes sense, right? Where the soils are better, where there's more infrastructure, where there's deeper community infrastructure. The opposite has happened. So the water has flowed away from where it has the highest potential economic benefit to developments essentially on green fields, developments that aren't very green on sand. And so a new model might try and fix that and say, well, we collectively, very much deeply and closely driven by First Nations people, by farmers, by people in the regions, to think again about how, within the environmental cap, how we allocate water. because that's fundamentally what this thing's supposed to be about. It's not about enriching smart traders in big cities. And I just make one other quick point. You could get the impression from what we are saying that the main problem is really a lack of integrity and this cost of paying these hedge funds for this liquidity that they don't really provide and isn't very good, right? That is not the only problem that these people create. The flaws in the market and the conduct of those kind of traders is actually affecting the allocation of water rights, and therefore it's affecting the profile of agriculture. And that was never intended. It was never intended that that would be the case. And so you'll see even from some of the submissions that the traders are very sophisticated in how they use wrinkles in the market and very, very fine-grained differences between states and jurisdictions around things like carryover and delivery rights to move water around to maximise arbitrage profits in ways that the market design has never intended, and in ways that are disconnected from the economic returns to agriculture. And I'll give you two quick examples of how that happens. Apart from exploiting the market wrinkles, the water rights don't properly reflect the environmental damage from moving water up and down rivers, for example. The people who are buying the rights downstream don't bear the costs of associated environmental damage to an appropriate extent. And the rights don't reflect water losses for the system. So there are inherent flaws which essentially subsidise perverse movements in water and subsidise the trading strategies of these external traders in ways that actually has a physical effect on the ground around where the water rights are, what kinds of agriculture is pursued. That was never intended by the market designers, and it is not of value to the community or to agriculture or to Australia. So a new model, definitely thinking about, you'd have to think about compensation and how to properly reflect investments that have been made in the past. But in the scheme of things, it's probably something that we as a community could afford. A new model would have to think about where the water should be and on what basis. And absolutely, we support, it's got nice support markets, and we support thriving rural communities, and of course we support agriculture. The problem is that the mechanism we're using to support those things at the moment is pushing in the opposite direction.
Just
I should probably
quickly, I'm going to ask a question.
I was going to just
We've got
flag something.
Couple
If
of
that's
minutes
right.
to go.
I was just going to flag that I didn't support giving hedge funds compensation. It was more that I was playing devil's advocate and providing you the opportunity to address some of those sovereign risk concerns that people that have been opposed have actually put forward. Mr. Warsack, thank you.
Thank you. We talk about the effects on First Nations people. Do you want to elucidate a bit around that? Because obviously water trading is affecting everybody, but how it specifically, and I don't think you actually deal with it in too much detail in your book, how does that affect First Nations people in relation to what you're talking about?
Scott?
Sure. Well, I think there's a number of issues that arise. I think one is in terms of water ownership, and if we look at the amount of ownership of water by our First Nations, it is a very small amount. There's a ability to then take place and participate in the market, and having that market knowledge and that capacity to be able to play in the market. And the other thing that came out strongly as part of our research was those perverse and unintended consequences of essentially using our river system as a delivery mechanism rather than thinking about those social and those environmental and those cultural issues. And there's particular examples in areas such as around the Barmah Choke of 100-year-old trees falling into the ground. And these are scar trees and those sorts of issues. Also in terms of forcing water through those areas at times that nature wouldn't normally have it, is having perverse outcomes. And there was a really troubling and sad story about having to move burial grounds in that particular area. So these are profound impacts on the Indigenous and First Nations people, culture and society, and the sort of responses that I think that we've seen in the past 10 years, even to say, well, here's $40 million or $60 million worth of water that we're going to give you, is just not going to address the imbalance that's there. That being said, there's one more comment that I'd like to make, is the connection, and I spend a lot of my time working in energy and climate change, is there is a great opportunity that is presenting itself right now, including in New South Wales, with the closure of coal-fired power stations and those very heavy water-intensive industries that are associated with that. That isn't actually going to allow freeing up water and some entitlements and allocations to help address these to address these imbalances. So now's a good time to be having this conversation, and there's certainly some work that's been done, and there was recently an allocation to the Gunai-Kurnai community in Gippsland of some water rights, and I think that's the sort of thing that we should be encouraging.
Given the nature of our federation, really what you're saying too is that we're going to require a cooperation between state and federal legislatures to get this thing done. We haven't seen that work particularly well so far in the Murray-Darling Basin Plan. Do you expect it to work any better, especially in such a major overhaul? I mean, we've got a 20th century technology and trading, but a 19th century market in terms of regulation. That's what we've got. I would have even gone further, and I wouldn't have called it the 90s. I would have called it the 1970s free for all, having been around at the time of Poseidon myself, and probably you guys too. Do you want to comment on that?
Certainly, and maybe I'll just go first to that. That's okay, Stuart. Look, it is, that's one of the histories of the Murray-Darling Basin in particular, that it has been an extremely fraught area when it comes to the politics of water. Now, that being said, we have seen times when there has been good bipartisanship or multi-partisanship at times, which is I think something to build on. I think that now is the time to have those conversations, though, when there's actually plenty of water in the system. So tempers are a little bit cooler, and there is a space right now, I think, to have that conversation. And there's also some real good signs, in my opinion, of federal and state collaboration, particularly with what we saw in COVID, which is, some people would say, not enough. But I think actually there's some really good signs of how the federal and the state system did work together there. And in energy policy, we are seeing the energy ministers come together and forge a way through to how we manage the transition. And I think the minister Keane in New South Wales said to the opposition, which was a Labor Minister Bowen recently, that it was the best energy ministers meeting that he had had in 4 years. So there is some good opportunities, I think, Chair.
All right, I think unless someone else wants to ask another question, I think we've come to the end of our questioning. Thanks very much for coming today. Thank you for attending, and we'll call it a close to this hearing. Thanks very much.
Thank you very much.
Thank you very much,
Thank you.
committee.
Thank you.
Thank you, Chair. Thank you, everyone. That was a pleasure.